Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. The trading day ends in the green today, ending in a bit of a surprise as some of the indices were in negative territory during the session. Busy tech news and the Fed rate decision to leave rates unchanged were at play. We're putting all of that data into context. And the fate of FedEx is interconnected, we know, with tariff policy. We're speaking exclusively with the shipping giant's CEO to find out how he's navigating during this challenging time. And tariffs stand to derail some small businesses. We're checking in with a model train company to learn more about what it's doing to stay fiscally on track.
Well, as a courier company, FedEx plays a crucial role in international shipping, including the handling of tariffs where goods are subject to duties. I was at the shipping giant's Memphis hub yesterday talking to CEO Raj Subramaniam about navigating the current economic climate.
Goods are being tariffed if they are coming into the United States. What are you seeing? Are you seeing flows change from international, and how is that affecting FedEx?
Well, I think FedEx is in the business of moving high-value goods across the global supply chain. In fact, we move over $2 trillion worth of commerce through our system every year. We connect about 3 million shippers to about 225 million consumers around the world, and we are in the center of this high-value supply chain ecosystem. The fact that we're here, there, and everywhere makes it, that we are the scale advantage that FedEx has got, that we are already there to these markets, meaning that any particular market is already connected to the world, and the world is connected to that market using FedEx. So yes, we will monitor the overall demand, and they're going to go through ups and downs as the situation changes. But as the supply chain patterns themselves change, because of our unique network that we have an advantage because we're already connected to all parts. So that's one. The second thing is the operational side of it, because we are in the business of moving packages end to end, including customs clearance. This is what we do for a living. So we are, preparing and are prepared to manage through these changes in the tariff environment. And I'm really proud of my team that they have done an outstanding job of getting ready and being flexible to manage through the system. That's happening. The third is also very important. Every country to every other country for every commodity, we have the classification information in our systems because that's what we do for a living over the years. But what's important is that over the last 5 years, we have engineered the data, and I use the word very carefully because that's what's going to be very important. And that structure is already in place. I didn't know that this was coming, but we are built a digital twin of FedEx essentially over the last 5 years. So now, as the complexity of tariffs and these flows becomes more frictionful, then the need for a platform like ours and clearance becomes even more meaningful. So prior to this, when it's much smoother, smaller companies or pure tech companies, the need of the hour was basic algebra. Now the need of the hour is advanced calculus.
So in other words, if someone is importing something, you can help them by saying, here's what your tariff rate is on this particular item?
Exactly. Let me give you an example. So there was this customer, shipping neon signs. They were under $800, and these are all the small customers who buy these neon signs, and there are varieties of combinations of them: steel, glass, wood, this, that, and the other thing. There are 200 different combinations. Prior to this week actually,
when the de minimis exemption has now been removed.
Yeah, so these were like $200, $300, $400. Okay, the shipper, he just Googled up a classification code, and he just slapped them on all shipments, and it cleared. Starting now, he needs 200 different classification codes. So now we have integrated their product catalog into our system, and we're auto-generating those classification codes because we have the information and Gen AI that's able to run across and being able to provide that information. So that's why I meant, the need of the hour is advanced calculus, and we can do advanced calculus.
Can you charge more for that service, or is that included already in the fees that you're charging?
I think our digital capabilities are now starting to expand quite rapidly, and I think we will be in a position to be able to provide even more advanced services to be in their workflows on the supply chain, and then we'll have an opportunity to create value for all our stakeholders.
Are you seeing customers who have just said, I'm not going to import those items anymore because I can't afford to now pay a full tariff without that exemption? I know you said on your most recent conference call that it was a minority of your package, I believe was the word that one of your executives used, but can you quantify that for us?
Well, I think it's too early to do that. This is really literally the first day or two here, and so we'll have to watch and see how it performs. But what I think who made our comment was saying is that our China to U.S. lane, our largest straight lane, was represented a small percentage of our total volume, or that goes through the FedEx system every single day. But however, this is something we have to watch very carefully. It's too early to call it right now, and there are some immediate reactions. You can see some of companies have basically said they can't afford to ship these, their commodities to the United States with these tariff rates. But they could change tomorrow, so it's very, very too early to call that question.
Do you think the U.S. will enter a recession?
Oh, I don't know. It's impossible it's too early and very dynamic to say what's going to happen to the U.S. economy at this point. We are focused on the things that we can control. That's the lesson I've learned over the last few years. So many things being very dynamic. Let's focus on the things that we can control, like put forward the best value proposition we can give to our customers, make sure that we are as efficient as possible, and build infrastructure for the future.
Something that we are seeing some of your competitors do, or even manufacturers, companies that ship things into the U.S., they're making it very clear how much the tariff is costing for customers. Is that something, do you all have a tool like that?
Well, that's the retailer's decision to see what they want to display to their customers. We can provide them all the information that they want. That's what we are part of their workflow. And now this clearance platform that I talked about, we're able to provide all this information. Then it's up to the retailer to decide what they want to charge and how they want to show those. Those are all policies that they'll have to decide on. We just provide the information required to do what they need to do. We're focusing on the things that we can control. We are making sure that we have as efficient as we possibly can, creating new value proposition, both physical and digital, for our customers. And our vision of making supply chains smarter for everyone is the right one for the right moment. And I think we'll be very successful. We are a people-first organization from the get-go. The philosophy of FedEx is people, service, profit. This was from the very founding of FedEx. It's not changed. It's not going to change. You take care of your people, they deliver outstanding experience for your customers, which generates profits for our company when we reinvest back in our people. This unending circle has guided our principle from the very get-go. So whether it's our communications, whether it is the way we treat people, whether and the way expectations are clear as to what needs to be delivered. And so, this is something that we have honed over now 50 plus years, and we continue to get better, but something we are extremely proud of.
Raj, thank you so much.
Thank you very much. I appreciate it. Thank you. Thank you.
Josh, it's funny, what strikes me now watching this conversation again is that, Jay Powell, Federal Reserve Chair, expressed some of the same sentiments, right? That it's too early to tell what effect this is going to have. That really was Raj's message in terms of the effect that the tariff changes are going to have on FedEx's business.
This stock, not great, whether it's year to date or over the past 12 months. What gets it working again?
Well, Subramaniam has really enacted a lot of changes in his 3 years as CEO. And by the way, really fascinating story. He's only the second CEO in the company's history after founder Fred Smith. He has done a lot of cost cutting and really embedded efficiency in a different way into the organization. He, of course, has announced that they're spinning off their freight division, which is a big change for FedEx. That's supposed to be by sometime next summer. And he's also streamlining the air and the ground network. So big changes. And so, I think he would say that at some point that will start to feed through into the stock. I also talked to an analyst who said that it is dependent on the economy and on demand for the company's services. So, if demand, which is why Rush kept saying, we control what we can control, right? He can't control the world, he can't control the global economy, they can control the business. So when the economy does start to accelerate, or shipping, the industrial sector in particular, starts to reaccelerate, that FedEx can be there to take advantage of that.
And where was that interview shot? Because it looked very serious.
Yes. So that was in the company's headquarters city of Memphis, and that was their Memphis operations hub. So they have a new facility. We're in a building that is largely automated, that has all these various scanners to scan the packages and robot arms to move the packages. And that room has cameras, not just in that building, but in all of these facilities around that FedEx bigger facility, to monitor how all those packages are moving. It's like a little city. There are planes coming in. There are lots of vehicles moving around. They have this protocol of beeping when they get to various intersections with the various vehicles. So it was really fascinating to be there. And we're going to have much more of my conversation with Raj and kind of his story and where he's taking the company in the coming weeks on Yahoo Finance. So keep an eye out.
I will. Great job, Julie. It was a great interview. Stick around. Much more As for Trend that's still to come. Stocks closing higher as the Fed holds rates steady. Chair Powell sticks to a wait-and-see approach, and Yahoo Finance's Allie Canal joins us now with the trading day takeaways. Allie.
Hi, Josh. All right, well, let's start with the word of the day, the week, the month. Uncertainty. This was present in the Fed's policy statement. It was present during the conference that happened at 2:30 p.m. And really, it points to the fact that the Fed is in wait-and-see mode. I actually want to play a little bit of what Chair Powell had to say earlier today.
There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of what the appropriate path for monetary policy is. So we're not in that place, and as that develops, and I can't really give you a time frame on that.
And fun fact, Josh, he actually said the word uncertainty about 13 times throughout that press conference. So wait and see. And this was largely reflected in the market action. We didn't see any sizable swings. All three major indexes closing in the green, but we did see some choppy trading action throughout the session. You're taking a look at the S&P 500. We did see a sharp downtick at 2 p.m. on the heels of the decision. This wasn't due to the decision. We knew that they wanted to remain on hold. It could have been due to changes in the policy statement, with the Fed saying that they see risks tilted to the upside when it comes to the outlook. And that brings me to takeaway number 2, which is the fact that it's still all about tariffs, because right around the time that we got the Fed decision, headlines started to emerge that President Trump said that he will not be lowering the 145% tariff on Chinese imports as the two countries are set to come to the negotiating table this weekend. There were some thoughts that maybe he would consider lowering the tariffs in a show of good faith, but he simply responded no. So it sort of points to the fact that markets, they've been anxious really over the past 2 months, really hinging on every word from this administration, no matter what other macro policies are going on out there.
Yeah, and Besson, of course, hanging in Switzerland, talked to his Chinese counterparts, although it's interesting, Besson giving interviews and kind of lowering expectations, but we'll see what happens.
Yeah, and also I wanted to note that we saw some pretty significant single stock moves. So, for example, if you take a look under the hood at the Dow, for example, you'll see that Disney actually led the Dow higher today. We closed up around 11% here, which is very significant considering the company has been really struggling since the start of the year. They reported a beat on both the top and bottom lines. They raised their profit forecast, and they also revealed a new park coming to Abu Dhabi. So that was great. But also, we had NVIDIA helping us out here as well, because a Bloomberg report is saying that Trump is looking to potentially get rid of those Biden chip export controls. So we'll see what comes of that. That's lifting NVIDIA shares today up around 3% at the close. That also helped the NASDAQ sort of recover in late trading as well. Alphabet, though, just continued to struggle throughout the course of the day, and this came after Apple said it was looking to integrate AI into its own search engine.
That was a big story. I mean, that was a really big, unusual move. You had Apple's Eddie Q, head of services, longtime veteran of Cupertino, and when he comes out and says searches on Safari dipped for the first time, right? And he's chalking that up to AI. I just think that raised all these worries that have been front and center for that company, the existential threat of AI for Google's bread and butter.
Right, and then Apple shares, they closed down today as well, down about 1%. So just another continuation of this AI story and how all of these big tech companies, all eyes are on them as they're spending aggressively. And really people want to know who's going to be the winner here in the AI race, especially when it comes to these hyperscalers.
We'll watch. Thank you, Allie. Appreciate it. Stick around. Much more Ask for a Trend. That is still to come. Small businesses have been feeling the pinch from tariffs, and they're even threatening to derail the model train business. For more, we're welcoming in now Stacey Walthers Nafa, CEO and President of Walthers Trains. Stacey, it is good to see you and have you on the show. Maybe just to quickly begin, Stacey, for the viewers watching here at home, can you tell us a little bit about your company? I know you've been around a long time, Stacey, so a little bit about the history and what you all offer the model train fan.
Yeah, thanks so much for having me, Josh. Happy to share. We're a 93-year-old family-run and operated business, owned and operated business, founded by my great-grandfather, who's over my shoulder here, founded the business in the Depression. And so it's a true entrepreneurial story. Started his business taking something that he loved and turned it into a business. And then 4 generations later, here we are. So we produce and distribute model railroad equipment, essentially helping people to make miniature worlds. So we're a producer of product in our own Walthers branded product line in pretty much every category that helps a model railroader to do that. And we also distribute 175 lines of other people's product. So that includes Lionel and Atlas and a bunch of other products. And we sell to hobby shops all over the globe. We also sell direct to consumer. So we're really in this thing, and we're in support of this hobby, which is model railroading, and also hobbies in general.
Stacey, let's get to a big issue that I know is front and center for you and a lot of small business owners, which are the Trump tariffs. Walk us through what they mean for your business, the ripple effects. Where are your trains made, Stacey?
So there's various categories of things that we produce, and much like the big world, it depends on the kind of specialized skill set that you need to make the thing. So when it comes to locomotives, which have digital control and sound and a lot of components, and they're highly technical, they've got a lot of detail, like the ones that you're putting up on the screen there for your audience, those are all produced in China. And so if we're a producer of that product and that impacts us, it also impacts all those other companies I just described who also represent the same product. So we've got some that are made in other parts of Asia, but if you look at certain product categories, were never made in the US. This is something that the skill set was developed, in Japan. It advanced in China, and really the whole model railroad industry shifted their supply chain about 30 plus years ago. So with 145% tariffs, it's really calling into question whether we can still bring in that product, whether we can make it long term. It's a discretionary item. We're in a hobby business. So the pricing that you would have to increase to absorb that tariff is pretty onerous for somebody who might be choosing a hobby. And our core customers being, boomers, people who might be on fixed incomes, and then families on the other end, the new customer that we want to get. Their budgets are being pinched elsewhere by rising prices. So we get hit in a couple places here.
So with the plan B, Stacey, as you try to think through this, if your costs go up, is the plan, okay, you eat those costs, Stacey, you pass it along to the customer, the model train fan? Would it be a mix of the two? How you trying to think through the various scenarios here?
Yeah, so we've got a lot of scenarios, like a lot of businesses do, right? And so it's a little bit of both. Obviously, we have to protect our business in the short term and in the long term, but our customers are, the way that our bills get paid around here, so we have to protect them too. But at 145, there's absolutely no way you can absorb that. There's just no way you can do it. So you have to pass along a price increase. Should they go down to a more reasonable level, I think that we have the appetite to absorb a lot more and have the impact on our customers be a lot less. But this is a decision, even right now, about whether we continue production or not on certain products that we had scheduled for the back part of the year. So there's a lot to discern. So in some cases, our customers will be impacted because they just won't be able to get the product that we originally would have been supplying them.
The bottom line for the president, Stacey, and you've heard him say this, right? He wants more stuff made here in the U.S. Is that financially tenable for you and your industry?
I mean, the short answer is no. But at the same time, we are not unwilling to explore that. But time is not on the other side of many companies who are a lot bigger than us. As I like to say to my team, big companies have some shock absorbers that are likely a lot bigger than our shock absorbers. So the time element of that, I think some product categories are more likely than others, and we've started to explore that. But right now, we have to make the short-term decisions that we're making, so we don't have a lot of time to do that. But we're not opposed to it. And but the locomotive category, that one, since it was never done here, that product literally was never produced here. That concept's like maybe a 10-year in the future, lots of money, money that I don't have if it's held up in shipments that I can't necessarily sell. That's a really tricky part. And what we'd like to say is our hobby, and I'm representing not just the model railroad industry, but also a broader hobby coalition. And we're really just asking for an exclusion because we understand the administration's trying to accomplish some objectives, but we do not make a material impact on the trade deficit, and we are not a matter of national security. So we're really hoping that there might be an opportunity to stand up an exclusion process, much like the last one, which we were excluded, our category is excluded from the last 301 tariff.
Stacey, it was so good to have you on the show today. Thank you so much for joining us and your time. Appreciate it.
Yeah, thanks for your interest in our story.
Thank you, Stacey.
Thank you.
Let's take a look at what's trending now after hours. We're locking in on shares of ARM, Fortinet, and AppLovin. First up, let's take a look at shares of ARM. ARM reporting a beat on fourth quarter results, adjusted operating margin also topping expectations. While looking ahead, company's first quarter earnings outlook missing Wall Street's estimates. Now over to Fortinet, those shares sinking after hours. The company announced the results for the first quarter with Q1 revenue coming in line with estimates at $1.54 billion. Company also projecting full year revenue between $6.65 and $6.85 billion. That matches estimates. CEO saying in the earnings release that the company will continue setting the industry standard in cybersecurity. And shares of AppLovin, they're getting a boost in after hours trading following a double earnings beat for the first quarter. The company saw a 40% increase year over year in total revenue and exceeded expectations for second quarter guidance. Company also announced it's in agreement to sell its mobile gaming unit to Triple Dot Studios for consideration of $400 million in cash. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.